Good morning, everyone. This is Brad Matheny. Lots of questions this morning, particularly about what I should be doing. And I think that's something that you guys need to understand. I am not a broker, I am not a licensed individual. I can't go out and tell you what to do all the time. In fact, I can make suggestions, but beyond that, about what I see in the market, and what I think is likely to happen, that's my own opinion. Beyond that, you guys need to learn to make decisions on your own. It really comes down to the fact that I am not going to go out every 10 minutes and try to tell you guys what to do. That's not what I'm doing here. My whole research, the concept of what I'm doing, is to provide you exceptional research and tools to make your own decisions. Okay. I need you guys to understand this. And I need you guys, even if you're new and you're confused, okay, let's go over the data one more time. So here we're looking at an SPY 10-minute chart. We've got this deep, deep selling. Remember, we had a topping pattern today, which I indicated right over here. Scroll right back over here in the morning video, that I thought that we would run into resistance up in this area, up above this red area here. And I highlighted that we'll probably run into resistance around this 554, 555 area, right? All right. Well, look what happened. We ran into resistance at 554.40. Pretty solid expectations. Now the market is rolled downward. Does this mean that we're going to end up in a consistent downward trend? I don't know. I mean, I really don't. This is a pretty good indication. We've run into some resistance, but we could continue to see the markets roll higher, finding secondary resistance up near the 555, 556 area. And I would expect that any higher resistance would be right up in this area, which is, again, this lower channel support right here. You can see, I'm going to try to make this bigger. You can see this lower channel where we broke through. We would be looking at resistance right above, right below that level, 556.82 down to maybe 555.50. So you have this zone here. Let me try it again. There we go. And this zone. So here's the two zones that I think are going to be critical today for resistance, really kind of in this area here. And then a second area right up here. Nope, moving that line. I want that line. Right up there. So you see these two areas. These are the areas I believe are going to be critical resistance. So now understand that we've already come into that initial resistance area on this early morning rally. Okay, I would be looking for price at this point to attempt to move downward, potentially down into this basing area, fill potentially this gap, maybe right across this eye, attempting to fill the gap, and then maybe moving higher, maybe not. So again, we're getting downward pressure right now on the SPY. The markets have reverted back to the upside. This could very well be our peak for the day. And I'm going to tell you that, like I said, you need to start understanding how to make some decisions here regarding what you're seeing. This is a big reversion. This is, the markets are up 1%, over 1% at the open. That's a big move. Remember, I've taught you this before. Market volatility. Okay, so let's do this. 0.25 to 0 0.75% is relatively normal. Okay. 0.75 to 1 point, call it 3 percent is a large range day. 1.3 to 1.6 is a very large range day. Okay. And 1.6 plus percent is a huge day. So you need to understand that the way we're looking at this normal range is when we open 1.25% away from Friday's close, we're already looking at a fairly large range bar. Okay. You cannot look at a 1 or 1.25% move and expect the markets to move another 1 or 1.25% higher. At this point, the move was fairly tight. It had already made the move pre-market. So you've got to be cautious of it. And obviously playing this downside risk to fill the gap, you need to be aware of the gap formation. Now we're likely going to come down and find support right in this area. So I will highlight the area where we may find support. I'll call this the Bradley support zone. Okay. And what we're going to do is we are now, if you are taking any trades, obviously the trend is down. The momentum is downward. We're near this lower channel right here. Let me try to get this up. Visual order, bring to front. Okay. Visual order, bring to front. And so this zone, this deeper zone below this yellow line, is overextended selling. And as I mentioned to you in the morning video, I tried to be very clear, folks. In the morning video, I tried to tell you that I expected price to stay in this range. So look, I'm going to highlight this, going to make it a bright yellow color. This is where I expected price to stay. So you need to understand that, like we're seeing right here, we're starting to see some basing. Let me come over here and show you. We're starting to see some basing set up. Come on, bigger bars, bigger bars. There we go. Finally, we're starting to see some basing. Where is basing setting up? Basing is starting to set up very cleanly right around this support level. Okay. And that's right at this yellow level, which is going to probably end up being moderate term support for a potential secondary move up into this resistance area again and this resistance area again. So be aware. I cannot come out and tell you what to do. It is unethical and it is illegal. I will not cross that line. I'm trying to be very clear and trying to teach you how to read the market trends, which is why I'm working on building this indicator for you. Okay. You can see this is the ES 10-minute. We've been long all morning long. We got a pullback coming down here, trying to get these new features to work. And it looks like we're going to see some sort of a moderate pullback down into support. You can see we're already nearing these Fibonacci support channels, but we're still technically bullish. So this is an upward trend. So again, I'm going to be working on these tools to help you. Notice we're building support here. We will likely find support in this area, maybe deeper down here, but this would be a washout low leading to maybe a secondary chance here. Remember, this topping pattern is the ability to move higher, run into a peak, and roll downward. We still have a lot of time left to potentially move up into one of these areas and potentially roll down. So you've got to be anticipatory of the fact that we are looking at this channel. Remember this yellow channel that I created We are looking at price trying to move back into this rotating upward channel, this yellow channel, before we change direction. Again, I cannot tell you what to do. It is illegal and unethical for me to do that. But I am giving you the best advice, telling you that you need to look for moderate upward bias trending. Remember, we are already in moderate upward bias trending. Look here, 10-minute, 30-minute. 30-minute is still bearish. Okay, it's still in a downward trend. 5-minute obviously is bullish. Let me scale this back out. Moving back down into deep support. So when we move back down into these channels, these clouds, I want you to start thinking we're in an uptrend and we're moving down into very deep support. This would be an area where I would be looking for price to either base or bottom and attempt a new rally, or it's going to blow through and establish a new low. If it, again, price has already broken through this low, it's established a new low. If it cannot get down to this low, then it's going to reverse and try to come back up here to the upper level. So let's again focus on the primary structure here, which is the longer term structure is a peaking pattern rolling into consolidation for a day or two before we start to rally out of it. Generally, as I told you this morning, I think you're going to stay in this 551, 552 area all the way up into this 558, 559 area through the next 2 days, moderately melting upward, like I told you in the weekend videos. But again, I want you guys to be able to make your own decisions. And until I get this thing ready for you, you're going to have to rely upon, your own decision making skills. You see where we're at down here, this deeper low? Okay, let's come back over here. And remember, look at this SPY chart. Okay. SPY charts come right down off of that yellow level and bottomed. Okay, this is again what you need to pay attention to is critical channels and critical support. I'm not going to be here every 5 seconds or 10 minutes trying to tell you what to do. I normally let the markets flush out the first 30, 40, 50 minutes, do whatever they want to do, and then take a look at the market. Right now, we're about 40 minutes into the market, 45 minutes into the market. It looks like this support area is holding. I would be expecting a move up into this area, 554, 555, 556, and then rolling downward. So I'm looking at a new upward opportunity for trending, not freaking out about this downward move. And again, it's all related to the cycle patterns. Cycle patterns say we should have a top. Guess what? We'll probably have a top today. Okay, guys, talk to you later.